At 9:30 this morning, 911.5 million shares of SpaceX hit the open market, the biggest lockup release in stock market history. Here's what happens next. Understand the scale. That is nearly $100 billion in newly tradable stock. The IPO itself, the biggest IPO ever, issued 555 million shares. This morning nearly tripled the public float. There is 2.5 times more SpaceX stock available right now than yesterday. Who is selling? Early employees and early funds, up 50, 80, even 100 times their money. Founders Fund put in 600 million. At the IPO, it was worth 50 billion. But it is not Elon Musk. His shares are locked until June of 2027. This pattern is older than the market itself. Uber fell 40% below its IPO price on expiration day. Rivian dropped about 20% in a single session. Palantir lost 13% in a day. Snowflake staggered its release, just like SpaceX, and still fell 11% in the final week. And the pressure does not end today. More tranches unlock this month and again in October after the next earnings report. The full lockup does not expire until December 8th. The selling pressure has 4 full months to run. So where is the stock? At the time of this video, SpaceX opened at 107.09, dipped as low as 105.11, and is trading around 112.43, up almost 4% on the day, on more than 100 million shares traded. Now the other side of the trade. On Tuesday, Musk reposted a $10 trillion valuation thesis to his 241 million followers. The case, SpaceX is not one company. It is 5 companies stacked. Pillar 1, Starlink, 10.3 million subscribers, doubling in a year, doing over 11 billion in revenue and 4.4 billion in operating profit last year. Pillar 2, AI compute. Anthropic, Google, and Reflection AI pay roughly $28 billion a year to rent SpaceX data centers. Pillar 3, chips. A $119 billion terafab in Texas, so Musk never waits in line at Taiwan Semi. Pillar 4, launch. Orbit cost $54,000 a kilogram on the shuttle. Falcon took it under $3,000. Starship targets under $100. That is a 500 times cost advantage. And Pillar 5 is not a business. It is the stack itself. The rocket carries the satellites carry the compute, the fab makes the chips. Starlink pays for all of it. Every competitor rents a piece of that board. Musk owns the whole board. Remember why the stock ripped at the IPO? Only 2% of the company was available to buy. Demand crushed supply, and the stock ran from 135 to 225 in 3 days. That supply constraint is officially over. The setup from the article: let the sellers dump. The stated target is $58 by year-end, the level to start buying. Once early investors are out, shorts are forced to cover, institutions build positions, and demand exceeds supply again, just like the IPO. What to watch? The tranche calendar, the December 8th full expiry, and that $58 line. For more briefings like this, visit startwiththa.com. The link is below. Subscribe so you don't miss the next one. This is education, not financial advice. Always do your own research.